If I had to choose one tool on TradingView, I'd go for the moving average ribbon. I think any ribbon works way better than any single moving average, because it has all those layers the price often reacts to, and it works like a rubber band in trending markets. Today we'll review 3 ways of using it: the trend alignment filter, the pullback entry, and support and resistance confluence. For the demonstrations, I'm using EMA Ribbon by F-Script. It plots 8 exponential moving averages, periods 20 through 55, each one 5 apart. That tight spacing is the whole point. Instead of 2 or 3 averages with big gaps, you get a dense band that moves like a single object. When the market trends, the band fans out. When it ranges, the lines braid together. The colors run from yellow on the fastest average down through orange to dark red on the slowest. They're fixed. They don't change with the trend, so you read direction from the order of the lines, not the colors. When the yellow fast lines are on top and everything's stacked in sequence down to dark red, price is in an uptrend. That's all you need to run the 3 strategies, so let's get into them. The simplest way to use this ribbon is as a trend filter that decides which trades you're even allowed to consider. The rule set is short. When the yellow average sits on top and every line below it stacks in order down to dark red, the ribbon is fully bullish. You only look for longs. When the stack inverts, dark red on top and yellow underneath, you only look for shorts. If the lines are tangled and crossing through each other, you don't trade. The second condition is expansion. A stacked ribbon that's fanning apart tells you the trend has momentum behind it. A stacked ribbon that's contracting tells you the move is running out of energy, even though the order still looks correct. You want alignment plus expansion together before committing to a direction. That said, you can also use a contracting ribbon to your advantage if you trade breakouts, since the ribbon coiling in can signal that price is compressing before it explodes. But that's a topic for another video. This alone will filter out a surprising number of bad trades, because most losing trades in trend strategies come from taking signals against the dominant flow or inside no man's land. Once the trend filter says you're allowed to trade, the ribbon gives you a natural entry technique. In a stacked bullish ribbon, you don't chase price when it's extended far above the band. You wait. Sooner or later, price pulls back and dips into the ribbon itself. The averages act as a dynamic value zone, and in a healthy trend, buyers step in somewhere inside that band. Your entry trigger is the first candle that closes back above the fastest average after touching the ribbon. Same logic inverted for shorts in a bearish stack. Price rallies up into the band, then closes back below the fast line, and that's your entry. There's also another way some traders enter here. Instead of waiting for the candle to close, they place a limit order at one of the ribbon levels, like the 20 or 50 EMA, and wait for price to pull back and fill it. Either approach works. It just depends on whether you'd rather react to the close or have your order resting at the level ahead of time. This gets you into established trends at better prices than breakout chasing, and your invalidation is obvious. If price cuts clean through the entire ribbon and holds on the other side, the pullback thesis is dead, but you want to give your stop loss some room to breathe anyway. The third strategy stacks the ribbon on top of horizontal levels, and it's the strongest of the 3. Before the session, you mark the key support and resistance levels on your chart. Swing highs, swing lows, levels that price has reacted to more than once. Then you add one rule on top of the pullback entry from strategy 2. You only take it when it happens at one of your levels. A bullish ribbon pullback that lands exactly on prior support is a fundamentally better trade than the same pattern floating in the middle of nowhere. You're combining dynamic value from the ribbon with static structure from the level, and when those two agree, the bounce tends to be cleaner. The best version of this setup involves a level that has flipped. Old resistance that breaks and later gets retested as support with a fully stacked ribbon behind it is about as good as confluence gets. So those are the 3 strategies, and they all work, but they share the same ceiling. The ribbon shows you the setup, and then it steps back and leaves the execution to you. Everything that happens after you spot the trade, the timing, the risk, the levels, that's on you to handle manually. Look, it's a basic free TradingView tool, I get it, and it works to some extent too. But that's the part I wanted to solve, so I built Quantum Ribbon Pro. Same core idea, a layered ribbon reading trend through stacking and alignment. The difference is it takes over the decisions the ribbon leaves on your desk, and it maps almost one-to-one onto the 3 strategies you just learned. Trend alignment stops being something you eyeball. The system scores every potential signal on ribbon state, momentum, and volume participation, and only prints a buy or sell when the confluence clears a threshold. And that chop problem from the first strategy is handled by a range filter that detects when price cuts through the full ribbon and pauses signals until the trend structurally reestablishes. The pullback entry becomes a dedicated ribbon bounce mode that spots the dip into the ribbon and the reclaim automatically, and every entry comes with a full risk plan attached. Stops from ATR, percentage, points, or actual swing structure. Targets at your chosen risk to reward, partial exits in stages, and an automatic move to break even once you're in profit. The support and resistance work is fully automated. It detects levels from pivots, sizes the zones by ATR so they adapt to volatility, and tracks flips live, recoloring broken resistance as support the moment it happens. When a signal fires at a zone that agrees with the ribbon direction, it's marked with a boost icon, so you get the confluence without drawing a single line. It has plenty of other features too, a multi-time frame ribbon, a trading hours filter, granular customizable table stats, and JSON webhook alerts for bots. But it's not the features only that make it valuable for me. It's the backtester that comes with it that I'm proudest of, because it can show the real performance of any combo you choose to work with. More than that, it shows you what combo would work for you before you even start using it on the indicator. Honestly, you probably can get away with the simplest ribbon without any extra features. Some people only trade price action after all. But if you want to remove all the guesswork and have some advanced features within a couple of clicks, that's what Quantum Ribbon Pro is for. Link in the description. Try all 3 strategies, and let me know in the comments which one fits your style.